Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Stanley, Chief Economist at Amherst Pierpont Securities, a Santander company, to discuss if the economy will show more resiliency in 2023. Stephen, it's great to have you with us. Welcome to Trade Talks.
My pleasure, Jill. How are you?
All right, doing well, thank you. And let's talk about that. What do you expect from the economy in 2023? Do you see more resiliency?
I do. There are a lot of folks that are expecting a recession in the near term. I think the consumer is going to hold up a little better than that. In particular, I would say, my main idea here would be that households still have quite a bit of excess liquidity that was built up over the pandemic. Some of that's been spent, some of it's been eroded by inflation, but I believe in the aggregate, households are still sitting on a pretty significant cushion, and as a result, they're likely to be able to continue to spend going forward.
Several layoffs have been announced over the past few weeks. What are your thoughts on the labor market?
Yeah, we're starting to see some cooling, but we're coming from a period where we had pretty extreme labor shortages, where labor demand well exceeded labor supply. And now things are moving back into balance, but I would say the labor market is still tight. We're still seeing hefty job gains every month. The unemployment rate is still sitting at a cycle low of 3.5. I think you'll see gradual cooling this year, but I don't think it will be as abrupt as what others might expect. And I think a lot of the layoffs that we're seeing is really reflects a normalization of the economy. There are a number of industries that were artificially boosted, if you will, for one reason or the other during the pandemic. And a lot of those industries, tech being an example, some parts of the financial industry, another example, where you're just kind of coming back to normal now. And there's still plenty of hiring going on in other places. There are still a number of industries that are still trying to catch up from the labor shortages that they endured during the pandemic.
Have we reached peak inflation? And if so, what levels do you think it could settle at? And of course, what's the risk to that thesis?
So I think we probably have seen the highs in inflation. Certainly, the headline numbers were inflated quite a bit last year by the run-up in energy prices that followed the Russian invasion of Ukraine, and of course that has unwound to some degree. But we've seen a little bit of relief on the core. I think some of the supply chain-oriented price hikes that had taken place during the pandemic have started to fade a bit. But I think that inflation is, by and large, going to prove a little stickier going forward. I think, maybe we can get down to 4 or 5% inflation pretty easily, but I think getting from there to the Fed's target of 2 is going to be much more difficult. And I think that's, the Fed has kind of been trying to brace investors for what could be a long and difficult struggle in that front.
The Fed will announce its rate hike decision this week. What are your expectations, and do you think a shift in its policy is possible?
So the Fed is likely to move 25 at this meeting. A number of officials signaled that in the run up to the meeting. So it's another decline in the size of rate hikes. But Chairman Powell and others have reminded that they're probably not done just yet. The last round of Fed projections that came out in December had the Fed peaking with a funds rate of 5 1/8, which would be 3/4 point hikes, including the one that's likely coming this week. And that's exactly what I expect. I expect a couple more hikes after this week.
And finally, Stephen, how are you thinking about positioning with this backdrop?
How am I thinking about, say it
Positioning.
again?
Positioning.
Oh, yeah. Well, look, the markets I think, are very optimistic right now in the sense that a lot of people believe that inflation has been conquered, if you will, or that we're on our way to a relatively painless disinflation. From my standpoint, it looks like it's going to be a little tougher than that. I think the Fed is going to stay at that 5 1/8 level for at least a year. So the Fed is likely to continue to be tight for a year and a half. So it's a period where I think there's going to continue to be a lot of risk. Inflation is not really good for either equities or fixed income, and I think that's an environment that we've seen over the last year, and one to a certain degree that I think is going to continue in 2023.
All right, Stephen, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.